Good morning, good morning. How's everybody doing? Hey, Ben, Travis, Kevin, Shark, what's up? Hey, Jim. Welcome to the folks who are joining us on YouTube as well as from in the room. I'm good, I'm good. Happy Friday. We made it. We made it to Friday. Got a few scrapes and cuts and bruises, but we made it. Post the link here. Hey, Dan, how are you? Get the old charts up here. Hey, Moran, how are you? Super, what's up? So, so we've got ourselves in a bit of a pickle here. I will. I was a little lazy last night. I crashed and I went to sleep. My longer term levels are, and let me explain where these big red lines, they represent sort of larger levels. And this 53.42, that is the bottom of the 55.84 to 53.42 zone. Where I got these zones was back in COVID days. And let me just scroll and show you folks. This is the power of market profile, and actually the power of electronic. Actually, it's more not the power of market profile. It's the power of electronic execution in this day and age. The balance zone that I am using, all these zones that you see, they're all derived from this is the original balance zone, 2749 to 2810. And then I doubled it and doubled it and kept doubling it, right? So the concept that we use on the 1 minute chart, it all started using daily charts, and I started doing this around COVID. And that's where these zones come from, right? That's where these zones come from. Sorry, I clicked something and I went white. Anywho, that's, you know, and they work. That's the nice thing is they work. It's all based on cost basis, right? Everything that we do is based on cost basis because this market is, it's a market, right? So I've got, I'll start filling in these levels here. And how do you do that is you just say, you go 5100 to 5340, and then you cut it in half, and then you cut it in half again, and then that way you get some levels that work really nicely. Like that 5543 and 3/4, you can see that yesterday that was close to the high of the day, right? And now this level here is 53.47 half. It's funny because I'm starting to remember these levels from back in, when we were coming up, putting in new highs every day. Now we're retracing that move. So they're helpful, right? So overnight inventory is a little bit, oh God, I don't even know what it is. Jam's not up. But there's the close of the previous day. That's not good. Hang on. Let me just get rid of that. There's yesterday's close. So it's mixed. I'd say overnight inventory is about 50-50. We're trying to find a bottom in this market. And a lot of people will try and tell you where it is. The honest answer I can tell you is I don't know. And any good trader will tell you, if you ask them, where's the bottom? If they give you a number, and if they say, the bottom might be here, let's see, okay. But if they say this is going to be the bottom, don't believe them, right? Very few people. And then if you can call the bottom, how the hell do you trade it, right? So I'll let the market and the professionals find the bottom. We have a gentleman in our room, and he works at a place that manages $4 billion, and those folks are taking it nice and slow, and they're having committee meetings to figure out what to do and how to plan and how to put together their agenda. And that makes sense, right? Because the large stewards of money, they don't just throw money around. They sit, they have meetings, their investment committees decide, okay, well, we'll do this, we'll trim that, we'll do this. They don't just do knee-jerk reactions because they have a responsibility to the people who they manage their money, right? Now, day traders today, let's see if we can stay inside yesterday's range, right? Because I think we're going to go in and out, and let's be honest. That low, I don't think that low is secure, the overnight low. All right? Don't be surprised if we test it. Okay? So let's go take a look at our market profile a little closer up. You can see that the volume point of control is up here at 54.23. That's where 70% of the inventory is priced, and the inventory is priced between 54.06 and a half, 7 to 54.32. That's what they call the value area. That's where 70% of the inventory is priced, and the majority of that inventory is priced at 54.24, which is the overnight point of control. So that's sort of the blue collar way of looking at market profile. I like simple. I like uncomplicated. The other thing too that we had yesterday is the last half hour of the day, right, created what they call a price spike or a price probe lower. And the market profile theory is that had the market been open another 5 hours, would prices accept underneath that spike base, or would they have returned higher? Right? So tonight, that spike base is being respected. There is supply between the overnight high and that spike base. Right? Supply equals what you guys call resistance. Okay, so we're just walking through the profile, right? I like to walk through the profiles to see where we're going to have buying, where we're going to have selling, potentially. So when we come to our setup, right? Our setup is a repeatable, scalable way to do business every day. When that setup presents itself, then we can trade. Otherwise, we're just taking guesses, right? And we don't want to do that. We want to have some sort of, have some sort of clue how the business is going to respond and work. So if you're shorting now, say you're short coming out of, excuse me, say you're shorting this market because we're underneath yesterday's low. The natural place to look for a target is that stop here. That is how we trade in market profile. Now, that's a bit far away, so what we do is we do balance zones. And these balance zones, this morning I've got 54.16 and a quarter to 54.25. And so every morning I do the same thing. All right. I come in and I look and see, okay, you know, we look at where the larger picture, and then we zone in. Okay. Let's see here. If I knew you did live teaching, I would have shared it. Hi, James. How are you? Yeah, I do live teaching, and I do teaching in the room, and you know. Um, let's see. As a former market maker, did the clusters of retail liquidity often coincide with the POC in the market profile? I only found market profile in 2012, Thousand Gods. As a market maker, actually, I wasn't a market maker. I was a wholesale distributor, and I gave market makers the order flow. So my job is a job that's not talked about. When people take companies public, they'll often have somebody who runs the stock on smaller base. Big companies, right? They'll go to an investment bank like Goldman Sachs, and they have a trade desk. They have a book runner. They have a lead trader who handles all the business. I did all of that for smaller companies. So say you and James and a couple of other people took a company public and you had a couple of 100 million shares, I would help create the market so you could sell that stock. So the market makers would call me and show me buyers. So they'd call me up. Say, Citadel would call me and go, "Hey, JJ, I can pay you, the stock's $1. I can pay you $1 for 100,000 shares," because they got that buy order from a retail client, right, that came in through the market maker. Then I would sell them 100,000 shares at 97 cents. So they'd make 3 cents on 100,000 shares for making a 10-second phone call. So we didn't use market profile. So I didn't even have charts up. Usually I had 6 to 12 level 2s on my screens and time in sales because I was the market. Does that make sense? And my job was to liquidate. So I wasn't a retail trader, right? And I didn't even know what market profile was at the time. So what you do when you're a seller is you look for other sellers to see if they compete. Now we can take that and use it in retail trading. For example, right, if we are short, say you're shorting this market here. Well, right here is where the seller is. You could see that the tops of these candles are where the sellers are initiating. So say I'm short 12 and a half, right? And I see that the sellers are moving lower, then I can stay short. Now when the next candle opens, if it opens underneath 42, I can stay short. You put your bids in, right? So I shorted 12 and a half just with the micro to test it, and I covered and I'm flat. What video can one watch? Well, there's tons of them in the video section, Novocaine, but the best thing to do is be on these calls and ask questions. So I was a liquidator. So I've worked 200 IPOs where we take a company public, and then first I used to work in marketing before I became a trader. So I would figure out ways to get you guys to buy. Now, back in the old days when we used to ride horses to work, right, we used something called direct mail. I was in the shadows, yeah. It's funny, Shadow Trader has that name, but you know, a lot of my clients would call me the Shadow because nobody knew I existed, right? And you know, the thing is, if you didn't know that I exist, that means I was doing my job, right? Uphill in the snow both ways, exactly, exactly, James. Back in the old days, right? That's why I don't show my face, right? A lot of people ask why I don't show my face. The reason I don't show my face is most of my clients are still alive and they are worth hundreds of millions of dollars, and that money is all in offshore accounts. And that's why I use nicknames like the Penguin, the Freak, the Tailor, the Baker, right? Um, so I don't say their names and get them into trouble, right? Also, I'm not that good looking, so that's another reason. Nobody really wants to see my face. It'll probably break the web camera, right? So the balance area, right? I don't even know what a derivative is, Novocaine. I'm just joking, right? It's just cost basis. So your balance is this is where you bought your product, this is where you put it on sale. This is where you make profit. So the red zone is the markdown area. The green zone is profit. Offshore domicile is legal? Well, I'll let you, James Workman, and the IRS and every other tax agency, I'll let you guys work that out. Okay? Right? I will not get in the middle of that battle. So did you see at 54.14 how there's a seller and how I took that short at 12 and a half and I was and you got to cover quick, right? I like scalping, right? Because scalping lets you know if you're in, you're out, and either you're wrong and you can cut your risk quickly. You don't hold on to trades. These markets are going to be punishing, right? So I like to admit I'm wrong quickly. I've learned that the hard way. Being stubborn, especially in a market like this, where this market is doing what we call price exploration. We are trying to find a bid, right? Because they've changed economic policy. So now the market has to react to that change. So, and price discovery is a violent, intrusive act. It's not family friendly. So when you do trade, don't get too big for your britches. You know what I mean? Don't get to a point where your ego thinks that you should be making, 30, 40 grand a day trading, right? And that's unfortunately what happens to people. They get into trading and maybe they make 5 grand a month at work. They think they should make 5 grand in a day trading. It's completely unrealistic, right? So manage your expectations, manage your risk, because we all want you to be here tomorrow, right? Now let's see where these clowns find a bid. Oh, what did I forget to do this morning? I forgot to go and set VWAP. And nobody reminded me. I can tell you guys are all sleepy. It's okay to be wrong in this market. You are going to be wrong, right? Just when you're wrong, admit it quickly, right? Nothing wrong with being wrong. It's going to happen, right? Ah, there's VWAP right there. Now, do we have sellers at VWAP, which is around 13? Right. Don't be afraid of being wrong. You're going to be wrong a lot, right? You scratch trades, it's okay. Just make sure your scratches are for little. And if you scratch two or three in a row, right? Start off the day trading the micro. Even if you have, like, I have an account that I trade. The gentleman's got quite a large sum of money in the account. I trade the micro when I start just to make sure my brain is working. Am I seeing things right? Because I would rather lose 50 bucks than 500 to see if I'm seeing things properly. Right? It's a 23-hour trading day. You don't have to go gangbusters off the start. Test the market. Use test trades to see whether what you're thinking is correct, whether the flow of customers, the order flow, matches up with what you're thinking, right? And if it doesn't, take a chill pill, reassess, right? You know, and it's okay to be wrong, right? As the late great Aaliyah said, at first you don't succeed, dust yourself off and try again. Really, that's all it is. See how the sellers are moving lower and lower and lower? Well, it's because they're price competing, right? So they were competing here, then they were competing here at just above 12. Now they're down here at 10. So say you're shorting this move, as long as that offer keeps moving lower, right? Minute by minute, that's beautiful. That means the sellers have to compete to capture the buying because we're running out of buyers at 12, at 10. So we have to mark down the product at 9 and 8. Let's see now if we have to mark it down under 7 and a quarter. So say you're short 12, right? And you're still short and it starts creeping up above 9. That's a warning sign. That means the sell orders that took it from 12 down to 7 are complete for the time being, right? That's why this notion of unfinished business is very, very wrong, right? Once an order is complete, once a set of sell orders is complete, and I know this because I was the seller, when I'm done selling, I'll lift the offers and the market goes up. That's why you watch the offer, right? The offer is this red line. On Sierra chart, there's a bid-ask indicator, right? It's called the current bid-ask lines. Use it. It's worth it. I'm sure other trading software has it. It's the simplest and the most useful indicator you could ever have. Now today, I'm thinking after the RTH session, which is 9 o'clock a.m. to 10:30, I'm thinking of doing a Markets 101 at around 11 a.m. Let me know if you guys are interested. I know it's Friday, so people's attention span might not be the best. Hey, Corey. Just talk about the concepts that we use in trading. Our our goal is to really simplify your analysis and your execution so you're able to think and perform under fire, right? And that's why a lot of traders they're okay on the sim for because it's like they're playing a video game, and then when they switch to live, they lose all their money because they have not put in that execution work, and that's hard. We want to make sure that you have a method of executing trades that manages your risk. Now, what do I mean by that? Like, for example, if I had been short 12 and the market got down to this 8 area and it couldn't take out the 8s, right? If it couldn't take, if I had a bid in at 8 and I didn't get filled, I would have just grabbed the offer before it moved up against me, right? Because I like getting paid. I don't like having trades go against me, right? So when I'm short at 12, I'll put in orders at 9, 10, 8, and let the market hit me on the way down. That way I'm not chasing the market around, right? Otherwise you end up like Rocky chasing the chicken around, right? Moving your stop, doing this, and then a lot of people freeze, right? If I've got money on the table, I'm taking it, right? Well, I was going to do it live, DJ Trader, so it'll be on the channel. I'm just trying to see whether I should do it on a Monday or a Friday. Because sometimes people are tired by Friday. They're like, you know what? It's been a rough week. I don't want to hear anymore. You know? I like to take the pulse. You know how they say read the room? Right? I want to see what you guys feel because nothing is worse than somebody talking after a long week and everyone's like, you know, it's like when your boss wants to have a meeting on Friday and everyone's like, ugh. It's like Friday before you leave, we're going to have a staff meeting. Oh, God. You know? Okay, Corey. See that seller? They're still there. Do you see that? They're still there. See, the rat bastards are still there. Right? Boom, boom. Now they're lowering their offer. Right? And this is a very good thing for you to observe if you're not in a trade. You sit and watch the offer. And I know I sound insane, but if you sit and watch the offer, you'll get a good sense of that movement down and you can stay short. That's what creates that trend line that you guys, you know, the guys who use trend lines, that's what the trend line is, right? When you get a trend down, it means the offer is moving lower. When you get the trend up, it means the bid is chasing the offer higher as prices are going up. That's all that means, right? It's not rocket science, right? So if it breaks that trend line, it means that the sellers have seen buyers, and you'll look for that level to see if they come back in and sell 11, right? If the offer lifts above your trend line, look to see where, right? So I'm sure there's a chart pattern that you guys have, right? You know, I don't know all the chart patterns, but you guys have Head and Shoulders, Selsun Blue, you know, upside down, flan. I don't know all the patterns, but whatever pattern is, there's a business reason that creates the pattern, and you should understand it. Is anybody in the room? You guys still around? Very quiet. Just checking. Oh, there we go. 11's good? Okay. Okay, just checking. Yeah, the unfinished auction is. But what does it mean, John? You know, when people say things, John, you got to ask them what the hell it means. And how can you actually benefit from it? Right? No matter who says it, even if I say something, call me on it. Go, JJ, what the F does that mean? And how do I make money from it? Because a lot of trading is like, I could say, well, you know, statistically, geometrically, we'd like to induce some unfinished business and in a roundabout way, The delta. What the hell does that mean? Right? How do I make money off it? What is actionable? There is so much stuff written. London's opening here, right? We're in a new period. Let's see if we could take out that 5403 stop, right? What does it all mean? And how do I use it? Right? Yeah, this whole nose print trading thing, you know, what does it mean? Yeah, people just want trades. Like, so I'm trying to tell you, okay, put your buy order here, put your stop here, because if the market takes out this level, your trade doesn't make business sense anymore, right? Other than that, right? I don't care if they have 50 years of experience. How are you going to use it to make money, right? Look at this, right? What's FVP? There's a seller there. That is useful information. Fair value gap? No, I don't. No, I don't. Listen, I think it would get. I use for me, it's a gap if we open outside the previous day's range, right? If a market opens inside the range but away from the close, right? It just means that in that opening auction there was order flow or orders that came in that caused the market to move. And I've done videos about that as well. Look, so do we still have that seller at 10 and a half? Well, they let it breathe to 12 for a second and then re-engaged. That is information that is useful. Focus. Don't worry about all this crap. How are you going to use it? Right? Because I can spout all sorts of platitudes all day long. Right? And tell you that it's an art, not a science. It's, you need information to make money. You're sitting there trying to make money. You're sacrificing time from your family, right? You're sacrificing your cash. You don't need somebody to tell you that it's unfinished business and they need an X-Lax, right? Where do I put my buy order? Why should I put my buy order there? And where do I put my insurance in case this all goes to crap? Everything else is BS. Sorry, I'm getting a little emotional about it, but some people just keep spouting these platitudes, right? And they're absolutely useless as you know what on a bull. It's useless, right? I know there's a seller at 10 and a half. So if I'm going long at 8, I know that there's a bunch of traders there selling into that 10 and a half bid. Right? They let it breathe for a second, but they come back in, right? That is information you can use, right? Show me a pattern and we'll pull it apart and find out the business reason for that pattern. So you're not just blindly trading a pattern. If you understand what creates the pattern, you're going to understand when to take the trade, where to put your risk, and when that pattern fails you, you're going to understand how to get out of the trade before you lose all your money, right? You got to be practical about this stuff, folks, right? Look, there's a seller at 10 and a half. That's practical information. So if you're shorting 10, you put your stop above that red line, right? And put some bids down here at 8 and 7 and cover. And make a couple of points. And pay yourself, right? Instead of worrying about, All this nonsense, right? You ever see like institutional traders and they're talking amongst themselves? They're not saying anything that retail traders can use, right? If you guys are tuning into my channel, I want to give you information that you can use. Otherwise, you're wasting your time. I don't want to waste people's time, right? We knew that there was a seller there. There's no reason to go long, right? And if you're short, that helps you, right? Now, let's see if this 53.98 and a quarter works, right? So balance times 2, balance times 4. This is the discount zone. We're in the discount zone now, right? Trying to give it away. Just keep it simple so you can actually make some money. And if you can't make any money, you have to have ways to know to stop trading, right? You get stopped out 2, 3 times in a row, stop trading. Obviously, you're doing something wrong or you're reading something wrong. And that's okay. It happens. It's okay to be wrong. Just don't be stubborn and wrong because that's expensive, right? Now, did a little flush under 7. We're going to come back up. Where do the sellers initiate? That's what you should be asking yourself right now. Where is that seller going to come in? Right? Are they here? Are they here? Where are they going to come in? Are they here? There they are. They're right there. Sorry, JJ, if I don't have Sierra, what tools can I use to draw the levels? I think every chart software has a way to draw a rectangle. Correct me if I'm wrong. Okay, here we go. Let's see if that seller's still there at 10.5. Or have we flushed those sellers out at lower prices, right? If they see buyers at 10.5, they will move their sell orders up. They'll move them up to where VWAP is. There we go, right there. See? So had you gone long at 4, you know that there's a seller at 10.5. Does that make sense? That is practical information you can use, right? You're long 4, 5, 6. Sell it at 10. Take your profits because somebody else is going to grab your customer. How to recognize where the seller is? Jerry, and welcome to the room. It's simple. You don't need to memorize candle patterns to know where the seller is. All you have to do, my friend, is look at the top of the candle. That's where the sellers initiate. How do I know this? Because I used to be that guy. Right? I used to be that guy. If I was selling at 10.25 or 10.5 and you sold at 10.25, I'd come in and sell at 10. Then you'd go 9. That's how markets work. Right? Sellers price compete to capture the buyer. Right? Just like when you go to a store, right? You ever go to those I think the best education, okay, here we're going to get up here again to the 10s. right? The best education is I went to Turkey last year, right? And you go to those night markets and you got like six guys selling the same fake Rolex. If there's a lot of people, if there's a lot of tourists, they're having a good day. If there's not a lot of tourists, they're going to price compete. Come, my friend, I'll give you a better price. That's what's going on here. It's just going on electronically, and the chart is telling you where they are competing to sell and where they stop selling. Where they stop selling is where the bid is. Because what you do is you sell the market down to where the large buyers are, and then you lift the offer and make the buyer chase you, just like now. Right? And it sounds foreign to you because you've never made a market. Right? You sell the market down to the bid, and then you lift the offer, which means it's like when the ice cream truck comes and the kids chase it. Right? You make them chase. Right? Now let's see if we can clean out those 10.5s. Do we have do we have the customers to sell at 11? Right? Don't worry, it's your first day in the room, right? It'll take some time. But the thing is, it's simple. Just don't fight the simplicity. Look, we finally brought in enough buyers to go tag VWAP. Now let's see if those buyers, if there's follow through buying, will stay above 10.5, right? But if we don't have follow through buying, right back down. That's why you sell into strength when you're long. Here's something that you can use. When you identify an area where the sellers are hanging out, waiting to hit it, right? And you're long, right? Make sure you sell into that strength because they're going to be there waiting for you. Okay? Hey, Dirksy, welcome to the room. I anchor my VWAP at the start of every 23-hour session. Now, I know Brian Shannon is a friend of ours, and he's got a great book on anchored VWAP. I like to anchor it in one place because I don't like having too many things on my chart because I'm old. Okay? And I got into the whole anchored VWAP thing, but I ended up buying a whole bunch of monitors. I think Brian has a secret deal with Best Buy. Because you start anchoring VWAP all over the place, and you're like, oh, I need another monitor. Oh, next thing you're like that guy with like 10 monitors, and you've got VWAP anchored all over the place. But me, I need to focus. Okay, there's that seller at 14. Let's see if they're still there. Here we go. Whoop, sorry. Damn wheel mouse. See, look. We're there again. Look. They are going to sell at the same places, my friends. Why? Because if I was selling at 14 and it gets back to 14, you can bet your bottom dollar I'm going to sell some there. Practical information, right? I'm not ditzing technical analysis. Let's put some business behind the technical analysis. Now you've got some power. You've got your chart patterns. You've got all that stuff. Now, if you understand the business reason why that pattern is created, now you're cooking with gas. Right? There's product for sale tonight. Right? Remember your charts, whatever kind of chart you're using, candle chart, TPO chart, itchy and scratchy chart, bunko charts, all that stuff you guys use, right? It's just a sales it's just a sales chart. It's telling you how the accumulation and distribution of inventory is going on a specific time period. So the half hour chart tells you how sales are going every half hour. The daily chart, how sales are going from day to day. The 1 minute chart tells you how sales are going from minute to minute. That's all it is. It's just a sales chart. Once you get that into your head, right? If you have some kind of situational awareness is what we're trying to develop for traders, right? So they're not just taking trades hoping that they're going to work, right? That they're not getting into bad trades and hoping that they're going to work and blow up their account, right? If you understand the business, now you don't need to understand market making, right? All you need to do is understand how this works. And it's really not that difficult. It's the accumulation and distribution of inventory. And right now, this market has a lot of inventory above us because a lot of people are trapped long. So the market needs to clean itself out. It needs to find a bottom. It needs to find the bid, right? The bid is where they're going to stop selling because some buyers come in, but that might take some time because large money managers don't make investment decisions off the cuff. They don't shoot from the hip. Okay? So in the meantime, the market is in the hands of speculators. Now these speculators have large, you know, large amounts of money, pools of money, partnerships, small hedge funds. And a small hedge fund now is like $1 billion, right? And they're sophisticated. They have fast data. They spend a lot of money on technology, right? And they're sophisticated. They know what they're doing. They're ex Goldman, ex JP Morgan, ex Morgan Stanley, ex Bank of America, right? And they manage money for friends and family and old clients, right? And they don't take prisoners, right? And they're the ones who step in when there's a vacuum, right? The speculator, right? Notice that this L period, when we came up to that 14, and this is what I missed, I apologize. Look how we stopped right at the previous day low, right? That would have been a good short. I should have called that out. Right now, if you had just sat down and started trading, you would say, oh, you know what? I'd go, oh, there's my balance right there, right? There's that rotation. The market is just rotating between these levels, like say 5 3/4 and 12. So how do you use that in a practical way? Well, when the market does the look below and fail of 6, you buy 7, you put your stop here, and then you sell into this strength because you know there's a seller at 10. Practical, right? What is the business reason for the trade? The business reason for the trade is that the sell orders, they come down here. Oops, sorry, I erased it. Right? When the sell orders hit this area, they find buyers and they pull their offer. So when they look below and fail, this is where you go long because they don't need to sell under 6. As soon as they sell under 6, you're gone. The business reason for the trade is over. Gone. Goodbye. Right? That is the business reason for the long. There is no supply under 6, so you go long 7, put your stop under 6. Now you have a tactical way of trading. where you're not just hoping and wishing and dreaming. You actually have practical information that you can use to manage your business. Look at how the sellers are there. The sellers are there at 14. Why are they there at 14? Because there's inventory trapped long over the previous day low. I think you should use a 1 minute chart when you're starting out. People say it's too fast. I say learn how to get faster. You do not want to be asleep at the switch in this market. You want to learn how to develop your skill. And you know why I want you to be fast? Not to get into trades quickly. I want you to be quick so you can get out of bad trades quickly and you train yourself, right? Just like a pilot, when they hit turbulence, they have a set of procedures that they do, right? So they do it almost without thinking, right? Because they've been trained. Train yourself when to get into a trade. Like, so you put in your buy, you put in your stop. As soon as your buy order gets hit, put your sell order in. Don't wait for an invitation to sell when the entire inventory of the market is above us. I have a 1 minute I use for execution, a 30-minute for the bigger picture, so I know where I am kind of in the neighborhood. So if you come into the trading room at Microefutures, we have a checklist for how to get into trades. We also have a checklist for assessing market conditions. Should I be trading at this time? Is the market telling me that there's opportunity for retail, or is this a wholesale market right now and I don't have any business being in there? No problem, Dirksy. Right? Once you learn how to manage risk and it becomes ingrained in you, right? Then you can work on your setup and understanding the subtleties of different types of markets. Globex markets are different than RTH markets, you know? And once you understand those things, practice at night because the market's a little slower at night and there's not as many participants. So you can actually see things happen and develop. Watch, spend time watching, right? I also am a big believer in rewinding your charts and replaying your charts after the trading day. Just like watching game film in football. Yeah, any explanation is slower is easier to digest when it's slower, right? That's why I love this Globex session because it's usually nice and slow and we can talk things through, right? The other thing I like to do is I like to say things out loud, like, oh, I'm short biased, right? So if I'm short biased and the chart's telling me, hey, psst, buddy, you're wrong, then I can clue in quicker. Be aware of your biases, right? You know, if you're overtired, if you haven't slept, don't trade, right? If you get into a fight with your girlfriend, don't trade. Don't trade angry. Don't trade sleepy. You know, certain little rules, right? Because you have to have your wits about you. You can't be sloppy in this business, right? It's unfortunate. You know, discipline is so much in this business, and I hated that. Oh boy. See, look at the bids coming in here. See? Look. As soon as the buyers come in, the offer is going to move away from them. Make them chase. See? Now that's information you can use when you're actually trading. Because say you were short from 10, right? Say you were short 9, 10, and it comes down here into the sixes, and you know they stop selling here. Cover. Make sense? Take the money, folks. Everybody's losing money hand over fist in this market. I strongly recommend that when there's money on the table, take it. Now, I know a lot of people say you should be holding trades longer, blah, 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 blah. You know what? Tell them, if they tell you to hold trades longer, tell them, listen, you give me 50 grand, I'll trade your money and I'll do exactly what you tell me to do. You'll see how quickly they shut up. Make your money, handle your business. Okay? And if you're a new trader and you're just learning, it's okay to make $50 or $100 a day, right? I know it's not glamorous, but it's the start. You have to build your experience, okay? Don't let these nutcases tell you you got to make, oh, you got to make 5 grand a day to be, or otherwise you're like, seriously? Learn your craft. Take some time to learn your craft. It'll pay off. Manage your risk. Ah, look at what happened. The overnight point of control moved down from 54.23 down here. So the cost basis of the inventory has shifted lower. So if we have enough supply, we can go take this, we can take this and try and sell it up here. If the customers are present to do it. If not, we'll just keep going back and forth in this box. Right? Seriously, people, there's a lot of people out there who'll give you bad advice. Now, if you're a profitable trader and you want to hold trades longer, come see me. I can help you with that. But if you're not a profitable trader, you got no business trying to hold trades longer. You're just going to lose more money, right? You got to be realistic. Now let's see if this area here holds. So 14 and a quarter to 6. And that's it for me tonight, folks, or this morning, wherever you are. Thanks for joining me. Remember, be safe today. If you've made money this week, today is the day to keep the money. Get it out of your brokerage account so your ego doesn't get its paws on it. Okay? Right? Just like the song says, take the money and run. Okay? If you need help, DM me. Please come visit us at Microefutures. We got that 7-day free trial running. I promise you'll learn more in 7 days with me than anywhere else. Thanks, everyone. Have a wonderful morning. Have a wonderful weekend. If I don't see you in our RTH session or our 101 session at 11, Trade safe out there, okay? Thank you. Thank you so much. Bye for now.